welcome to successfultradings.com. In today's video, we are going to share another instance of our 2020 option trading tips based on current US market conditions. So here is a chart of SPY futures. It was taken maybe an hour and a half ago, so you may see here. So the thing to note here, I wanted to do this introduction showing that, hey, SPY has gone from the high, let's say SPX more precisely, but you know that SPY is just a derivative of that, so mainly 1/10 of this. So we have gone from this high here from last week. This is a yearly from investing.com, so each one of the candle represents a week. So this is last week we were here at the high, so this week we had this candle. I wanted to point out the fact that typically there are some verbiage used. So a dip, for instance, will have put us somewhere here where the market will drop maybe 3 to 4%. So the usual buy the dip rhetoric that's you may heard on stock tweets and the likes will apply. So such instance, or here for instance, okay, dip and then it get bought again. So now if we look at this full candle from the top, we are very close to 10%. So 10%, that's a correction area. So between 10% and all the way maybe here is going to be correction. When we get below this, we could be talking about recession, but we are not there yet. So, but just give you a bigger picture of what's going on. So let's just go ahead and focus on today's topic overall. So let me bring our agenda on here and maximize that. So I want to take the time here to give you some option trading tips on how to trade this sell-off. So we have had 3 consecutive days where the market is posting lower lows. So for those of you who are new or who only are familiar with trading markets when it's on the upside, this is actually a great opportunity. So these option trading tips, they are going to help you navigate this, because the trend could actually last longer than just a week or a couple of weeks. We could be going into next earning in March or in April rather, within still. But what I wanted to show here is that we have great amount of opportunity. The first thing that I want you to do is that if you are the US or anywhere else, do not spend time looking at your long-term investment accounts as of now, because what that's going to do, each time that you're going to be looking at them, they're going to be down, and you're going to transfer those negative emotions into your day-to-day trading. So try to separate them by really just forgetting about that. Why is that important? I can go here and share again with you that the market typically recovers, right? So from here, this dips here, the market has recovered. From this other dip here, the market has recovered. This dip here, this is just 1 year. So you could tell me that, okay, fine, well, that's just 1 year. So could I have something actually to show you maybe a longer term on SPY here? Could I show you 5 years? Yes, I can. Here it is. So here's the 5 years of, these are the future as well. So it doesn't matter. That's why you see the same number here. But here now, I have 5 years. So each one of these is a month. And you can see we have one on here in 2018 towards the beginning of the year, just like we are now at the beginning of 2020. And notice how actually we went down significantly before having a major rally to the upside. So similarly here in mid-2017, we experienced something like that as well. So just be aware that these are part of normal market condition. That's why I've been advising some of you on the channel who are subscribed, not to just look at one direction trading. But right now, it's good actually to be a one-trick pony, in the sense that to do just one thing and one thing consistently. And what's that one thing that you are to do is to follow the current market trend until it changes. That's really my best advice to you. The current market trend is telling us that the action is bearish all over the place. Let's go ahead here and quickly maybe take a look at a chart of SPY. from TradingView. So here's SPY, and actually this is Apple. So here's SPY, and instead of the 15 minutes, maybe we're gonna take a view of the hourly. Okay, here's the hourly since Monday. Okay, maybe even it started here, but here it was still okay. I mean, as of Friday, things were okay. Some of us, we knew we had our SPY trading system up, so we made huge amount of money on this gap. But look what's going on. Look at the current trend. The current trend is calling for selling of any type of bounce. A bounce meaning that where the market tries to recover, any type of rally. You see these upper shadows, that's what has been going on. And I've been observing these markets very closely since Monday. Every single time that you have a 1 or 2 points in one direction, that's not the true direction, it's always come back. So let me go back and reduce so you have those instances here. So here, for instance, if you were using the standard, hey, where's the support, where's the resistance? This level is the resistance. So meaning that on Tuesday morning, when the session opened, based on the information that you gathered on Monday, 324, 325 was a major resistance, and therefore you would have taken puts on here. You would have been paid handsomely through on SPY puts. Similarly, yesterday's session, if you follow the pre-markets, which I always recommend, the resistance was about 315. So during the live session, they had this semblance of rally from the get-go. Actually, from the get-go, it was very bullish on here from 314 to 318, but it stalled. And this is typical of a market sell-off. It just starts selling off at 8:30 or so. So you can see some pattern on here where we heavily start selling off at 8:30. 8:30, that's my time, my Pacific time. So it's Eastern time in New York. That's usually 11:30. That's not usually. That is 11:30, 12. When people they come from lunch. I've seen that since Monday actually. That hey, it's better to maybe wait for 12:30 and to start trading. That's what I've seen really, because in the morning things are usually very dicey. You don't know the direction. They haven't set the support and resistance yet. So that's another tip that I could provide on here, to not to take that much risk in the first 3 hours of the session of this sell-off. Afterwards, you get a good idea of the setups, and really look at yesterday, for instance. Whomever traded yesterday, we made some money at some point here. The second time they tested 317, I believe. So let me go on the 15 minutes. We made a trade yesterday on SPY, I think around here. Because for us, we said, okay, 318 was resistance. So after SPY did this, so is this one above 315 or so? I think, yeah, the second time it came too close to 317. But here you got the confirmation below VWAP. And after that, it was doing sideways here. But all of these candles are sell of candles, really, because they're not allowing it to go up or right. This one was really the drainer. I wasn't even in front of my screen when this candle happened, this huge candle here. But I set up my automated trade to sell my position at a given price. That price didn't hit. It missed it by maybe 4 cents. So I had to rush when I got the alert. That's my setup trigger on my phone. And I came and closed my position somewhere here. So that's really how to handle the current market. So let me go ahead here and give you three examples of trade that we have taken and what led us into those trades. So we traded FedEx. When was this? On Tuesday. Yes, we traded FedEx on Tuesday by noticing that on our watch list, we have a watch list of about. We have a bigger watch list of 78 stocks, as you know right now, if you follow the blog on successfultradings.com. But on a day-to-day basis, our watch list may have maybe less than 30 stocks. So FedEx is one of them by default. FedEx is the bellwether of the economy. So since we're talking all about this series about the economy or so FedEx, why I got into this trade was because FedEx was the biggest loser on my watch list on that day. So I traded 150. The strike was 150 puts and 147 puts. They made good money, absolutely. So the technique here was to identify the weakest stock in my watch list. On Wednesday, yesterday, what did I do? Start of a similar technique where I decided to look at the ETF, the Dow Jones, SPY, and the Russell 2000. So the weakest one of them was in the pre-market, that is, was the Dow Jones. The symbol for the Dow Jones is DIA. So on this ETF, you can go on, let's say, investing.com, for instance, or Finways, and then get the list of the component. The Dow Jones only has 30 component. Nike was one of them on there. So it wasn't the weakest per se, it was among the weak one. But what got me into this trade on Nike yesterday was the fact that it was downgraded. And actually, the trade initially went against me. I didn't trade that well yesterday. I was feeling sick a little bit, so I did some things that I should not have done. But I was able to recover really nicely by the end of the session. So Nike, we traded 93 puts and 94 puts. That eventually actually turned out very, very good. Visa, we didn't take this trade, but this trade you can go and analyze it, or I can quickly flip it for us on TradingView. Visa was the weakest on the Dow Jones on Tuesday, so I made a note of that and I said that okay, let me analyze it on Wednesday. So obviously the market initially rallied on Wednesday, right? But Visa, if you go here, the symbol for Visa is V. So market comes in, and this is a 15-minute chart for starting at 6:30 on Wednesday, and it created a top at 193. From there, just like SPY did, it stalled. So you could have made all of this. These $3, actually more than that. 193.5 is 0.5 is a high. 188. This $5 on a stock with low historical volatility like Visa actually paid greatly. I do not know the exact amount of those. I didn't take that trade, but I was looking at it as I was dealing with my other position to say, okay, that research there led me to discovering a good option or strategy. So let me leave you with one final option trading tips on here. It's really, we have said this one too many times. StockTwits is not the place to get any ideas for trading. It's mainly, as of now, what's going on StockTwits is that you are going to find a lot of not a distraction, but just something to amuse you while you're trading. Trading should be fun, obviously. So what I like, for instance, I captured this image that one of the StockTwits member posted on there. I just took the image. So the bulls party is over and the bears are cleaning up. I mean, let me maybe take it on here. You see the bear here coming up to clean up, while all the bulls now in the market, they're feeling a little bit of pain. So I mean, yeah, go to StockTwits, but I mean, the headline or the description on there, they are of no value to your trading. Remember, at the end of the day, a successful trader is neither a bull or a bear. A successful trader is somebody who goes with the trend, meaning the price action should be the only factor determining how you go about making money in this market. I hope you enjoy this instance of our 2020 option trading tips, and we look forward to another episode in the upcoming days. Thank you very much for your time, and talk to you soon. Bye-bye.